back to Thursday and get into the S&Ps. I'm going to try to go through this a little bit quickly. We've got pretty good higher highs, higher lows coming in here. Kind of a choppy day. You can see that this is a fairly low volatility day. We do get a spring set up. We get a nice pull down, a rally up. Now notice that the volume is about the same as the upside volume. That really doesn't bother me all that much. We got a good spring in an uptrend. I like the look of these price bars here. And if they're both closing in here to the up above. 2 in a row like that just tells you that this has got a good move up. Now we look for a good drive up above the last swing high. We didn't get it here. Not every trade works according to the textbook, and you can see that the volume drops off, so we wouldn't stay in this. We just wouldn't want to be in here. We want to get out of this trade. If we're going, 5, 10, 15, 20, 30, 5, 45, an hour sideways, I couldn't sit through that. After 20 minutes, that's it. I'd be out. All right, let's go on in this day. Now we can lay in some trend channels to see if that's another indication that we're not moving up here. We're in all cases, we're away from, we're finding supply coming in earlier than what we would anticipate. We would expect supply to come in along the supply line. That's why we call it the supply line. But it doesn't come in there. So in this instance, we can also use what's called a reverse use of trend lines. Typically, when we draw a trend channel, in an uptrend, we're going to draw it from the lows. This is the demand line. We're going to draw the demand line first and the supply line second. In a reverse use of trend line, in this case, we've got the demand line in, but typically, in the standard use of a reverse use of trend line, we draw the supply line first and then put in a demand line. But here we've got a pretty well-defined demand line. We notice that not only is this reverse use of trend line being respected along these touch points, but that the normal demand line broke down a little bit here, showing that this market is a little bit weaker. And so we get a bit overbought up in here off of the reverse use of trend line. We're overbought. Maybe a little climactic. We get a little bit more volume in here. But look at what happens. We come down. We make a pretty good wave down on big volume coming in. So here's an opportunity for us to make a trade. On the rally up, very light volume. These two bars suggest this market wants to try to push up higher, but it doesn't. So you would be shorting on this bar here as it's coming down. And it's another nice little trade. Okay, let's get to Thursday's trading in oil. Told you I had a lot of stuff. Now here's Thursday with tick bars. So you can see, you can go back and take a look at 5-minute chart versus the 700. I use 750 tick bars here. Certainly usable, but it's not quite as clean as the 5-minute. Here we have a spring in the middle. We've got a nice uptrend going on. We don't see volume come into the downside. A spring sets up and gives us a nice move up above the last swing high. And so that's pretty straightforward. Also, this is the kind of look I really like. We can look back to the left, not just look at the immediate, and see that we have old resistance now turns into support. And as a couple of people mentioned on one of the earlier setups, this does actually, you were right about that on the gold, I think it was, that we were looking at, that these sometimes will create a little access line where there's a lot of trading around this. You can see that the market got resistance here. We come up, there was a little bit of resistance here, some resistance here, then it rallies up. It's got support, comes back down, support, springs, tests, and then goes on from there. So because of this line and the way this sets up, I'd be very interested in this. In fact, I was and did take this trade. It was a nice trade. Now notice we come up here into a large wave down. Look at the volume suddenly expand. And so we have a pulse, rest, pulse, first lower high type of trade right in there. And up in here, you've got price action in here that kind of just tells you that this market's died at this point. 2 level bars and then a down bar. If you're trading the price action, that's the price you go for right there, the down bar. If you were, you'd get in roughly the same spot if you took the prior low or 2 bars back low or a trend line break. It gets you in more or less at the same spot. Notice that we come back to this long support line, long access line, and now we have a spring, right? Now we have a spring. We're still in an uptrend. This is just an ABC move down. We can draw a trend channel in here or do the measured move, and we come into support, and it sets up another spring situation. And that's a nice trade too. Okay, and we also notice that the volume does pull back a little bit or dries up a little bit as we come back into support. So that's Thursday's trading in crude oil. Any questions on that, by the way? And let me make sure I'm not missing any comments. You are using both standard volume and Weiss wave volume. How do you decide which to use? I'm using standard and Weiss wave to show both. I like the Weiss wave on all my intraday trading, but some people don't have the Weiss wave, and I want to show you that you can still read the market without that, and therefore I use the standard volume when I'm doing presentations like this. But when I'm looking at, when I'm doing so let's take a look at gold. And here we are. I'm looking at this at 500 tick bars. You can see it's kind of jagged too. The volatility is not quite there for tick bars here. So we need to add a little structure to this jagged market, and then things will start to pop out. And I'll just do that fairly quickly here. We've got what looks like a down move in here. Now, somebody had asked about what happens when you get a lot of volume coming in and the market doesn't move that much. Remember we said effort versus result. I'll just do E versus R. Here's a lot of effort, a lot of volume coming in. Look at this choppy move here. No real result. Here's the same amount of effort to the downside. Look at the down move we get here. How come we didn't get that kind of an up move on all of that? Well, because somebody was stepping on this and selling into that buying. There was definitely buying going on in there, but there was also a lot of selling, and the selling dominated. So that's effort versus result. We get an up thrust in here. We want to see it take out the swing low. It does. It comes down. We can draw a trend channel in here. I drew one in lighter. Standard trend channel, and we want to take it off, down in here a little bit. Notice the choppy. So we've got a nice move down here, and then the choppy waves up. We don't really have anything going on in here until we get to this point. And now we've got a trend line coming in from this point and this point. This is our supply line. We would expect supply to come in here, and we get a lovely little up thrust with a lot of price bar shortening of the thrust in here as it's trying to go over. It finally does close over it once here, and then it comes down. There's your opportunity to short. You might have gotten short a little bit earlier. You want to keep your stop. If you know you've got this trend line back behind you, you want to keep your stop a little bit away. So you might trade lighter. Instead of putting on a gazillion contracts, you only put on a quarter of a gazillion on this bar here or this bar, whichever one. And then you can put the other 3/4 of a gazillion on when this price action occurs. I'm being a little facetious there, but you get what my meaning. So we come down a little bit and then set up yet another spring in here. It gets a little choppy. We haven't taken out the low yet. Kind of hold that. We've got no real indications of demand in here. It's just sideways kind of choppy action, and then we get another up thrust in here. And then finally we come down to the bottom of the trend channel on both of these. If we're trying, here's a question, if we're trying to swing trade stocks, is there any way to scan price action for potential securities you could suggest? Yeah, no, it's kind of hard to do that on this because it's discretionary. We've looked at trying to do springs and up thrusts in the past. One thing you can use is look at bullish engulfing patterns. They often come up where there's springs and up thrusts, or bearish engulfing patterns. They often come up with up thrusts. That might give you a way to scan. And then, trends are hard to scan for, unfortunately. What we do in Wyckoff is we wouldn't try to scan 100 or 200 or 500 stocks. We would look at a dozen to 20 stocks and just keep watching those day after day and using those as our primary trading vehicle. I know it seems like the right thing to do 100 or 500 stocks or 1,000 stocks to scan through them. But in fact, if you're limiting yourself to a dozen to 20, 25 stocks, you're going to learn those stocks pretty well. And you're going to learn how they move, and you're going to see things like this, effort versus result, way in advance. You're going to be seeing this. Why this is a choppy move up? Why is this? If this is a daily chart, why is all this volume coming in? And then you see the up thrust, and you know exactly what it is, and it's going to be. You're going to have the confidence to be able to take that trade instead of scanning every night 1,000 or 2,000 stocks and then seeing something come up. And you're going to say, oh, well, is that really a good trade or not? You're not going to have that level of confidence. Anyway, that's my take on it. On the gold chart, what's the wave size? Oh, I can't remember. What's gold? What's the increments? These go by ones and twos, right? 1, 2, 3, 4, 5, all the way up to 9. So it's not $1. No, I think it's 5. I think it's half a point. I think it's a half a point. The thing to do is to try the Weiss wave on different settings and see what looks good. And you want you want some variability, some variation in there. Okay, so that's gold with tick bars. Let's go